Hello, everybody. Welcome to another episode of Money Matters. I am your host, Hung Lu. I am with Cash Property, pointing that way, Cash Property. So I am in beautiful Vancouver, and this week we are going to be doing a couple of networking events. So before I get into those ones, I just want to say, today's episode on Money Matters, we're going to be addressing a topic that a lot of parents come to me and they express this massive stress about having to take care of their children as an adult. And I was like, okay, there's ways to do that. Like it's easier than you think. And so we're going to go through a way that you can take $50 and change that to $1 million. Again, if you don't know what I'm talking about, stay tuned because I'm going to show you how to do that. Okay, so I forgot to bring up the event that is happening this week. So there is, it's not this week, it's next week. It is the Wealth Development Network. We are doing a session next Monday. So if you are interested in attending, that would be a wonderful event to come network, learn about exempt market dealerships and what that is, why that's important. You know, once you understand how to use money and how to make money work for you while you're sleeping, oh my gosh, like your life will change so much. So I know in the last couple of episodes, we talked about how to pay off debts and how to get out of living paycheck to paycheck. Okay. At some point, you will do that. But having an understanding of how money works will help you get out of debt faster. Okay. And I realize that some of us are in that hole where we're still trying to, stop digging ourselves and going down deeper in the hole. Okay. So there's ways to do that. So my QR code is up here. If I can help you talk through some of that mindset issues, some of the challenges that you're facing, please feel free to reach out to me. I'm happy to do that. Okay, I've got a ton of information on my website as well at cashproperty.ca. So I'm pointing to my website. It's a direct link to my website, tons of information there. Okay, so let's dive into the calculation today. And I'm going to show you how to take $50 and grow that to $1 million. Okay, and so if you're a parent and you're like, oh my God, how am I going to take care of my kids? Because we all have some sort of deep down guilt, okay, about wanting to take care of our kids financially. I'm going to show you how to do that in today's episode. Okay, so let me share the Excel sheet. Okay, and like with all of the Excel sheets, if you want to get a copy of it, feel free to reach out to me and I will send that over to you. Okay, so let's go through this concept of this idea. And because we're talking about money, I do have to put out this this disclaimer that before you go and implement anything that I share on this episode, please go and talk to another investor, talk to an accountant, a lawyer, all of those other people who you should talk to beforehand, but then make a decision that's right for you. Okay. So let me make this a little bit bigger so that for some of us who have um, eyesight visions, we may be able to see it. Okay, so I built out this spreadsheet just basically showing you how you can take $50, go and buy a stock. Okay, and I'm not talking about real estate here. So stocks in particular. And yes, you could buy a real estate stock. And yes, I specialize in real estate, but in today's episode, we're not talking about real estate. We're talking about just buying a stock for $50. Okay. And if you're in a position where you don't have $50 to buy a stock, okay, well then start with 10, start with $5. It doesn't matter. Start with what you have. Okay. I'm going to use 50 because really, if you don't have $50, there's other issues going on. Okay. It's not just about the $50. It's a mindset shift here. Okay, so I built out the spreadsheet. We've got the age, the year. So the year is just going to start at 1. The age, I've put 12 here as just a place starter. So I'm going to update this to put a code there. So anything in blue is what you're going to change or be able to have the flexibility to change. Okay, so the 12 is a placeholder. The year is automatic because we're going to start with year 1 and you're going to see how the numbers work over the years. Okay. And time is in your favor when you are working with money, regardless of the age that you're at. Now, the younger you are, the bigger the road, the time frame, okay, the better it is for you. So that's why I'm using age 12 here. So my son's 12, so the example here works great for me. A lot of my family, like my friends, their kids are around that same age range. Okay. But this spreadsheet you can also use if you're older, like if you're 45 and you want to figure out, okay, if I'm barely making ends meet now, how do I grow what I have to $1 million so that I can retire the way I want? Okay. This is a great spreadsheet for that too. Okay. So we're putting in $50 here. Okay. This is just the price of the stock. Okay. And if you don't know what stocks you can buy, just Google it. Ask a friend. Okay. You can ask Chat GPT. Okay. There's so many stocks out there that are $50 and less. Okay. Now, I'm not giving stock advice here. So just as disclaimer there, but I do have some stocks. And the idea here is to find a stock that gives you dividends. Okay. It has to have a dividend payout. It doesn't matter what the dividend amount is, but it has to have something. So that's what this column H here. So I put a number of 1.2%, okay, per year. Some dividend stocks are 3%, some are 4. Okay, find a stock that you like and just stick with that one stock, okay? So this stock is $50. And we're also going to assume that there's an annual growth on that stock. The stock price is not just going to stay the same every single year. The price is going to go up, and hopefully it does go up. So here I'm estimating 8%. And if you're like, Huong, that's high, 8%. No, it's not. Okay. If you don't know what stocks to buy, the S&P 500, okay, the trend has always been, 5+%. Okay. And the S&P also does a dividend. Okay. So I'm not recommending S&P 500. I'm not recommending anything. Okay. But what I'm saying that there's stocks out there. So I've put together a couple of things here. So let me make this tab here a little bit bigger, because while I was putting this together, I'm like, okay, well, these are the stocks that I look at. So like bank stocks, like I love bank stocks, like banks always make money. Okay, so the bank stocks also have dividends. Enbridge is one of my favorite ones. Um, Real estate stocks, so like the REITs, the S&P 500, and TELUS. Okay, so I don't even know if Bell has it. I've always just done TELUS. Okay, so all right, so those are just a couple. Okay, I'm putting them out there just so that you can have something to consider. I'm not recommending these stocks. Okay, I don't get paid by these companies, and I think technically I'm not even allowed to recommend them. So these are just some of the stocks that I have. Okay, so here we go. So the number of stocks. So what I'm saying is that in this first year, you're just going to buy 12 of these stocks. Okay. And if you want, you can change that one. Okay. Like if you're really struggling and you're like, Hung, I have no money. Come on, $50. You can find $50 for this first year. Okay. The idea here is just to come up and start. Okay. So here we go. So I'm going to change this. Okay. So I'm going to leave the $50 in there. And I'm going to change this one all the way down. Let's see, how far did we go here? Okay, so I went up to age 46. So I'm just going to put one there. So basically for the next 50 odd years, for the next 35 years, I'm going to buy one stock at $50 per year. Okay, so it's baby steps here. Okay, we're buying one of these stocks for $50. Okay, so every single year, this one stock, I'm increasing it by one. So which is what this number is calculating here. So the total number of stocks. So it's just 1 plus 1 plus 1 plus 1. Okay. The value is what is the value in that stock account at the beginning of the year. Okay. So in this case, it's going to be $50. By the end of the year, it's going to grow by 8% and it's going to get a dividend of 1.2% on that one stock. So just keep in mind that it's per stock, which is fantastic. So we're buying one stock. The gain is $4 and the dividend is 60 cents. So not anything to write home to, but if we leave the gain and leave the dividends in the stock, it will compound. Okay, so that is the other thing. So let's just, I'm going to write a couple of notes here so that you guys can sort of follow along with the main important notes here. Okay, so this is the important things, important things. Okay, so number one, okay, so the number one is just start. Okay, it doesn't matter how much you're starting with, just start. Okay, number two is it has to have a dividend. And I say that it has to have a dividend because it's going to be compounding on that dividend. Okay, and it needs to be a growth stock. So something that you know and trust that will be around for another 20, 30, 50 years. It's got to be something that is going to be around. It's not, hey, you know what? This is a new trendy stock and that's what we're going to buy. Nuh-uh. It needs to be something really stable. Okay, so growth and stable. Okay, I'm going to put that there. And number four, you're going to leave the money in and let it compound. Okay, that is the four things I would say right now that, just focus on those four things. Okay, so we're leaving the gains and the withdrawals, sorry, the gains and the dividends in. So the withdrawal is zero, the dividends is zero, meaning that we're not going to withdraw them, we're going to leave them in. Okay, so that's why the gain is zero and the dividend withdrawal is zero. Okay, so this number here now tells me what is my balance at the end of the year. So this is just my $50 that I put in plus the gains plus the dividends. Okay, so it's very simple math here. I'm not going to be calculating out what is the gain on the dividend and what is the dividend on the gains and all that. Okay, it's just simple math of the annual gain on the value and the dividend percentage on the initial value. Okay, so then the next column is what is my total investment that I made that year? So you can see every single year is $50 because we've purchased one $50 stock. Okay, so it's just $50. And then the last column, the last couple of columns, my running total, that is how much money did I put into this account over X amount of years. So you could see it's increasing by $50 every single year. Okay. So what does that mean in terms of my percentage? Sorry, my investment per month. So I put $50 in for the year. So per month, I just divide that by 12. I'm literally putting $4.17 per month into this stock account. And if you can't do $4.17 a month, there's other issues going on. Like literally what? Going to Tim's, that's two coffees. Going to Starbucks, okay, that's half a coffee. Like I think the last time I went to Starbucks, it was like $10 for a coffee. Okay, so this isn't even enough. It's not even enough to buy me one of my fancy latte coffees, lactose-free coffees. Okay, so don't worry about the notes yet. Okay, the whole point with the notes was because I was working with this with a client, and it was the idea of how long they had to put in the money for their kid. Okay, so the idea here is that you're going to put $4 aside every single month to buy the stock, okay? And the numbers don't look that great. If this is your strategy right now at $50, okay, your kid at 12, let's just say by the time they are 46 years old, so you've been doing this for 35 years, okay, the value in there is not very much. Okay, it's 12,000 bucks. Okay, can they do anything with that? Well, maybe like they could take a nice little vacation on it, right? But it's not going to do very much. But the thing to look here is that that account now is worth 12,000. Okay, you've only put in 1,700. $1,750. That's pretty good. Like if you think about it, you've only put in 2,000. Like you've literally just given your kid 2,000 bucks, but it's actually worth 12,000. Okay. So when you look at it like that, that's not bad. Okay. So now this is where it really makes a difference. Let's just say you found a $50 stock. Okay. And you buy 10 of them. Actually, you know what? Let's do 12. Okay. So we're basically saying that you're going to buy one stock a month. Okay, so what does that look like now over here? See, so every single month you're going to put in $50 and you're going to buy one stock. Okay, now this is simple math here. So I'm not doing the drip calculation. Like I'm not showing, hey, you know what, what's the dividend and what's the gain every single month. I'm just saying, you know, if you have the $600, okay, simple math, $600, just go buy your 12 stocks at the beginning of the year. And then you know your gains and your dividends will just be on that full amount. But if you don't have $600, that's okay. Do $50 every single month. Okay, so now let's update this and let's just say you're going to do 12 stocks every single year for the next 30, how many years did we say here? 35 years. Okay, so we're going to go and do 12 stocks, 12 of these $50 stocks for the next 35 years. Okay, so if you are doing this example here where you've got a 12-year-old kid, by the time they're 46 years old, okay, they would have, okay, and so you don't touch any of the money, everything just stays in there. You're putting in $600 a year, okay? That's $50 a month. Okay, by the time they are 35, yeah, by the time they're, sorry, 30, by the time they're 46 years old, it's 35 years. Okay, it's this column here. Sorry, this row across here. You've put in $21,000 for them. Okay, but look at that now. It's now worth $147,000. That's huge. Okay, this is a good down payment for a house. Okay, now this, of course, means that they have to wait until they're 40 something to buy a house, which isn't ideal. Okay, so now let's bump this up a little bit. Okay, so we're saying here you're going to buy 12 of those stocks. Okay, let's just say we go and we say you're going to buy 12 the first year, then you're going to buy 24. So we're basically doubling the number of stocks that you're going to buy. Not doubling, you're just going to add 12 every single year. So on the third year, you're going to buy 36. The fourth year, you're going to go 48. Okay, and fifth year. So hopefully you're understanding, I'm just basically taking the number of years timesing it by 12. Okay, now I'm manually typing it in because I don't know why. Okay, I'm just manually typing it in. 86, 12, no, 84. Okay, and then 96, and then 108. Okay, 120, 131, and 144. Okay, so every single year, you're basically going to add 12 extra stocks to your portfolio, okay? And so you're going to do what you did previously and then just add 12 additional stocks and you're going to increase that, okay? So then that means by year 12, you're now buying 144 new stocks, okay? And we're basically going to carry the 144 until they are 35. Sorry, until they're 45, 46. Okay, so here's the idea here. You're going to buy 12, and then the next year buy 24, and then the third year buy 36. Okay, what that means is your investment per month is $50. Then the next year it's $100. Then you go to 150. At your highest point, you're going to be putting $600 a month towards your kid's investment account. Okay, now you're going to build on this. So it may seem impossible right now to do $600 a month, but if you're starting with 50 and you build that habit, by the time you're in this year here, what year are we in? By the time you're in year 12, you're going to have that habit to be able to put $600 aside. Okay, now look at this. Here's one of the big things here. By the time you get to year 12, your kid is going to be 23 years old. Okay. They're going to be done college, university, done trade. Okay. Whatever higher education they're getting, whatever they're doing, they're going to be done. Okay. They're going to go out and get a job. This is the transition year where you're like, hey, kid, you know what? I've paid for you up until this point. Now you continue it. If your kid is pushing back on this, there's another discussion that needs to be had then. Okay. But the idea here is that as the parents, we're going to pay up until this point. Okay. And then after that, you switch it to the kid. The kid now takes responsibility for their financial independence from this point on. Okay. And the reason why I'm saying that $600 here is very manageable for any kid at this age is shown on here. So I'm going to increase. Okay. So I've already got this increase. The kid's going to graduate from higher education. They're going to make minimum $75,000. Okay. If your kid's not making $75,000 as a minimum after higher education, something else is wrong here. Okay. So let's just run this at 75,000. Their monthly investment is the $600 that we said. Okay. Their annual investment is 7,200. So you're basically taking the 600 times 12. Okay. Once you do that, you take your 7,200 divided by their salary. Okay, that's 10%. That's less than 10% of their annual income that they're going to set aside for their investment account. There's absolutely no reason why they cannot do this. Okay, so we're going to just keep going on this conversation here. All right. So, okay, so now the reason why that part is really important, because look at this. All they need to do is put $600 into this account. Okay, look at this. By the time they're 35, no, sorry, by the time after 35 years, by the time they're 46, look at this. They have $1 million in this account. They don't have to add in anymore. Look at this. Every single number after this point is zero. They don't have to put in a single dollar into this account anymore. They can literally take this money, this $1 million, and live off of that $1 million. Okay. So as a parent, knowing this, you can set your child up and not have that stress of like, oh my God, how do I take care of my kids? How do I take care of myself? Okay. Whatever lifestyle you have right now, you can keep it and improve it if you want with strategies like this. Okay, so now a lot of people are like, $1 million is not a lot. Well, here's the thing. If you can't make it on $1 million, then you're not going to make it on two. You're not going to make it on three. It doesn't matter how much money you have at that point, because here's the thing. If you can't make it on $1 million, you're not going to make it on any amount. Okay, hands down. So that's one of the conversations that I have with my kid is like, hey, kid, I'm going to be passing off $1 million to you. Okay, if you can't make it on $1 million, why would I pass you the other millions? Right? Like it just does not make sense. Okay, so this is the idea here. Whoop, let me go back. Okay, so I'm going back here. So that is the idea here, taking the $50, buying stocks to make your 1 million. Okay, so now let's just run this scenario with some other stuff here. Okay, so let's just say you are 40 years old. Okay, your runway now is not going to be 40, 50 years. Your runway is going to be a lot smaller. Okay, a lot shorter, because you're 40 years old. You don't have, like, if you're in a situation where you don't have this huge account, this importance thing here is still the same. Okay, let me just, I'm not going to use red because I don't like the red stuff here, but I love green. Okay, so it's the same exact important thing. What happened to my last one here? Okay, for some reason that disappeared. Okay, regardless of your age, okay, regardless of your age, the important things still apply. Just get started. Make sure it's a dividend stock. Make sure there's growth and stability in what you're picking. And then leave. Oh, I spelled that wrong. All right, so leave. How do you spell leave? Okay, leave your money in and let it compound. Okay, yes, English is not my first language. Okay, it doesn't matter. Okay, so here we go. All right, you're 40 years old. So let's just figure out by 50. Okay, let's just say we have a goal here. By 50, we want to be able to look at retiring. Worst case scenario, 55. Okay, so let's go and highlight these cells so that we know what we're looking at here. Okay, and then we're going to highlight this 55. Okay, so for those of you who don't know, I am a retired engineer, okay? And it is an amazing thing to be able to wake up and say, hey, you know what? I love real estate. I love stocks. That's what I want to spend my day doing. And I'm going to work till 2 p.m. in the afternoon. And then after that, I'm going to go take a nap and wait for my kid to come home. Like, all right. So having that financial freedom allows you to do stuff like that. Okay, so what do we need to do to this spreadsheet so that by 50-55, you can actually say, hey, you know what? I want to take the afternoon off. I want to work 3 days out of the week. I want that flexibility to take business class and travel to China if I want. Okay, so we've got 10 to 10, 11 to 16 years to work with here. Okay, so let's just say we buy $50 stocks, but now, of course, we can't do, let's see here, we're going to shrink a couple of these cells here so that you can see, because these are all just going to be zero anyways, because we're going to leave it in. Okay, so if you just do 12 stocks, if you increase that and then you go 144, if you just applied the same numbers here, at the end of the year 50 and 55, you can see you're at 60 and 140. Okay, that is not going to give you enough money to live off of. Okay, it's not going to allow you to retire and basically live the life that you want. So what do we need to do to this spreadsheet so that you can see what it needs to be so that you can retire by 50 to 55? Okay, so let's just say we increase this to 40 stocks. What happens? Okay, and then we're going to double this every single year times 2. Okay, can we just do that? So we're just going to double it. Let's just say. Ooh, that's way too many. Okay, so let's just go up to 160. Okay, let's just say we just go up to 160 here. Okay, because I don't know. Yeah, there's no way we'd be able to buy that much anyways. Okay, so we are up to here. Okay, so if you got up to 160 stocks, okay, and you doubled it. Once you got to 160, you just left it at 160 and you're not doubling it anymore. And you just continue to buy 160. You're at 129. Okay, your investment is $8,000 a year. Okay, so I would actually really challenge to even bump that up. Like your investment at the beginning is 2,000. Okay, so I'm going to give you that, and let's just say, okay, 2,000. We're going to go to 4,000. Okay, I'm going to actually double. I'm going to go up to 100 stocks there. So 5,000 for the year. Then you're going to go 10. Okay. And then at this point, I'm going to actually go and I'm going to increase that to 400. Because by this point, if you're not able to put 20K aside for this investment, it's going to be very, very hard for you to that $1 million, right? If that's what you need. But here's the thing though. Look at this. By the time you're 55, you've got just over $500,000. That is huge. So if you can if you can buy $50 stocks, start at 40, get comfortable, build the habit of doing this 40 stocks at $2,000 for the year. What does that work out to be? Every single month, that's about 166. Okay. And then once you get to your peak, you're at about 1,600 a month. Okay. That's a lot of money every single month to be putting aside. But if you can do that, you can set yourself up to do 500,000. Okay. Now, by this point, you can actually take this money out and you can not invest anymore. Okay, so why I'm saying that is because now we're going to go here and we're going to say we're not buying any more stocks. So we're going to go 0 and we're going to buy 0 numbers of stocks. Okay, so what is that number? I'm just going to go all the way to the end. Okay, so and now here we're going to start withdrawing some of our profits. Okay, so let's just see what that would look like here. So we're going to go in year 17. We're going to change that to a yes. Okay. That means we're going to withdraw 3,000 for the year. That's not a lot. Okay. And then we're going to also withdraw I'm hoping this is not a wrong formula here. What are we withdrawing here? 3 million. Okay, there's obviously something wrong with the formula. Okay, why is that? Let's see. Okay, there is something wrong with this formula. So I'm going to say that we're not going to withdraw anything here. Okay, so this formula says that if it's a no, then we're putting in a $0, which is what it's doing. If it is a withdrawal, then basically it should just be, oh, you know why? Because we're timing it by the total number of stocks, which is $5,000, 5,000 stocks. Do we have 5,000 stocks, number of stocks? Yeah, because we're buying 400 every single year. So we have about 5,000 stocks. So 5,000 stocks times the dividend amount. Okay, so this really should just be this number here. Okay, so I'm just going to copy that down. Okay. And then I'm going to copy it all the way back up here as well. Okay, so now this number doesn't make sense now either. It should be way more than that because the gain here is 45,000 because you've just made a gain of 45,000. So yeah, there is something wrong with this formula here. Oh no, that is correct. That is per month. That's why. Okay. So, oh no, that's for the year. Okay, so hold on. So we're not dividing it by 12. 8. Yeah, because we're calculating it by year. So we're going to go take that out. Woohoo. Okay, so let me go and do this properly here. Okay, so what is happening here is that we are going to be taking out the 45,000, and then we're also going to be taking out this 6,000. Okay, so if you look at this, the balance at the end of the year is still going to be exactly the same as the previous year. Okay, any more investments in, and our total investment continuously at that point is going to be 277,000. That means for the next 15, 16 years, we're putting in 277,000. We've doubled our money, okay, to 570,000. But now that means we're able to pull out $52,000. That is now part of our retirement money that we can live off of. Okay, now for some of us, $50,000 for the year is not a lot. Okay, so this is where you sort of need to figure out some other strategies to help complement this 52,000. But think of it, you've got $52,000 coming in every single year. Okay, and you still keep this $570,000. So every single year you're going to pull out now this 50 something dollars, and you're going to pull out your dividends. Okay, so every single year you're basically just going to have no additional money going into your stocks, but now you've got $52,000 coming to you as part of your retirement, okay? And then you can now have that flexibility to say, hey, you know what? I want to take a day off. I want to take a day off every single month or every single week if I want to. I want to be able to travel in a certain way, okay? This allows you, if you can do 40, then 100, then maybe 200, going up to 400. Okay, by the time you're 55, you have some flexibility there. Okay, now, of course, we're talking about doing $200 a month to 1,700 a month during a few years to get into that habit of doing that. If you can do that, that is absolutely so amazing to be able to do that. Okay, so if you have any questions, please reach out to me. Here's my QR code this way here for the website. Okay, if you want to connect with me to figure out calculations like this, let me know. I'm happy to do it. Okay, so let me now stop the share. Okay, and I just want to say it is back to the school year. And for those of you who want to come out to a net working event. Okay. Check out the WDN group. We are doing an event next Monday where we're talking about exempt market dealers. And I will be there, and you will be able to meet with me and some other fellow investors to learn how to accelerate your real estate money journey. All right. Thanks, everybody. Have a wonderful week.